Did you know that experts predict Tesla stock will eventually reach $10,000? While the aging argument has yet to be answered, whether Tesla stock is overvalued or undervalued, experts say that the EV company's stock price may well reach $10,000 in the not-so-far future. Stay tuned and keep watching to learn more about this. As mentioned, fans and critics are in constant debate on Tesla's value. Some forecast an impossibly high valuation for the company, while others provide extremely low valuations. Of course, the leading EV company, as it is referred to, is performing well enough for Tesla enthusiasts, but not good enough for critics. In today's video, you will find out why experts predict a $10,000 price tag for Tesla stock. Tesla stock debuted on June 29, 2010, and it's up a stunning 24,389.7% since then to a recent high of $1,170.12. Tesla outperformed every single large stock currently in S&P 500, plus all those on the mid-sized S&P 400 and S&P 600 small caps on a percentage basis, showing an Investor's Business Daily analysis of data from S&P Global Market Intelligence and MarketSmith. NVIDIA is the only S&P 500 stock anywhere close in that time, with an 11,424% gain. If you had invested $10,000 with founder Elon Musk 10 years ago, your stake would be worth $2.1 million now. That works out to a more than 70% average annual return. The same $10,000 put into the S&P 500 during that time grew just $274 to $37,376. That's just 14% compounded annually. The magnitude of Tesla's boom is almost difficult to fathom. Over the past roughly 10 years, Tesla market value soared by $1 trillion to hit $1.18 trillion. It's already the fifth most valuable company in the S&P 500, ahead of Facebook. At its current value, Tesla is worth roughly 5 times more than Toyota Motor, making it the most valuable automaker in the world. Tesla is now showing it is a profit machine. Tesla has lost money on a net income basis every year since it was founded in 2003, until 2020. Analysts think this is the year Tesla drives even further into the black. The company is expected to make $8.94 a share in 2022 on an adjusted basis, up nearly 300% from 2020. And even including all charges, analysts think Tesla will make $7.18 a share, or $8.7 billion. Warren Redlich, prominent in the Tesla community as a Super Bowl, is a graduate of Rice University, Stanford University, and Albany Law School who retired after 26 years as a criminal defense and personal injury lawyer. In 2019, Warren began making videos about SpaceX, Tesla, and other related topics. While other analysts and investors shared their thoughts as to why Tesla has been leading in the EV market, Redlich also shared his 2 cents. He explained that Tesla is so far ahead of other companies building electric vehicles, partly because of their making full self-driving, FSD, almost ready for general distribution. He then gave the battery revenue model to demonstrate the amazing future value of Tesla and, accordingly, the price of their stock. According to the said model, $30,000 car minus 50 kilowatt-hour battery pack minus $600 kilowatt-per-hour revenue, $600 million per gigawatt-hour. At 1 terawatt-hour, Tesla does $600 billion in revenue. Aiming for 6 terawatt-hours in 2030, that is over $3 trillion in revenue. With a price-sales ratio of 5, that's a $15 trillion market cap. It's by calculation that the share price of Tesla stock is headed toward or becomes more than $10,000 per share, based on the current price and not including any possible share price splits. While others raised questions such as what happens when Ford, GM, and VW all produce electric vehicles, Warren simply dismissed them as true competition because they are so far behind Tesla FSD. Besides the battery revenue model, Redlich presented another model called the robo-taxi model. When asked how Tesla can move to an unreal valuation, he said that these 2 models prove exactly how Tesla will flourish in the near future and that the seemingly high valuations are actually realistic. Talking about his robo-taxi model, he said that during the Autonomy Day presentation, Tesla CEO Elon Musk said, in a side note, "We're going to have a Tesla-owned robo-taxi fleet of 10 million vehicles." He also said that each robo-taxi will make $30,000 in profit a year. That is $30,000 in profit for individuals who own the vehicle and run it as a robo-taxi, not the Tesla-owned robo-taxi fleet, according to Redlich. Assuming these numbers, there will be 10 million vehicles making $30,000 $10,000 in profit a year. Redlich emphasized that for him, these are both understatements of where it's going. Do you think Tesla can actually be worth $10,000 per share in the future? Share your thoughts in the comment section below. Again, assuming these numbers, 10 million vehicles making $30,000 in profit a year is $300 billion in profit a year. Fast forward to the year 2030, for example, and there is a price-earnings ratio of 30%, which is massively low compared to a company that is growing so fast. Leaving out all revenue from Tesla, all profits from Tesla Energy, as well as all profits from selling cars, and the company is supposedly making 20 million vehicles a year at this point. Therefore, a price-earnings ratio of 30%, that's a $9 trillion market cap, is a $9,000 share price. That is a $9 trillion market cap and a $9,000 share price. How much would you pay today for a stock that's going to be worth $9,000 a few years from now? It would be $2,000 to $4,000 per stock, and it is currently trading at around $700 a share. This is an understatement of the robo-taxi model, and it leaves out the battery revenue modeling as it leaves out Tesla Energy and Dojo as a service, according to Redlich. He added that there is so much potential in Tesla for revenue. There's 10 times more to go, says billionaire investor Ron Barron in a CNBC interview in 2020, going full bull on his big position in Tesla. I told you a long time ago that I thought we would make 20 times our money in Tesla. Barron went on to explain, so far we've made 4 times. I now think we're going to make double or triple again over the next 5 years, and double or triple again over the next 5 years. Ronald Stephen Barron, or simply Ron Barron as he is known, is an American mutual fund manager and investor, and is the founder of Barron Capital, an asset management firm focused on delivering growth equity investment solutions. Ron founded Barron Capital in 1982 and has 52 years of research experience. The buy and hold investors' $10 billion flagship fund, Barron Growth, has an annual turnover of just 3%. Barron also owns one of the biggest estates in the Hamptons, which he assembled from 2001 to 2009 at a total cost of $152 million. It's worth much more now. Ron Barron's real-time net worth is $4.2 billion. If someone were to ask, is Tesla going to be worth $10,000 per share? Ron Barron is definitely banking on it. Given this prediction, one is bound to ask, where will Tesla be in 10 years? Tesla's long-term growth won't solely be coming from selling EVs. The company has established itself as a disruptor, and it could continue living up to that image in the years to come. There are several other potential growth avenues for Tesla. First, the company is focusing on advancing its autopilot and full self-driving FSD features. To attract the best AI talent, Tesla hosted an AI Day event in August of 2021. Notably, attracting the best talent is key for Tesla to lead on the FSD front. Several automakers and technology companies are working to make autonomous driving a reality, and most have the financial resources to achieve that objective. Technological know-how could well separate the winner here. Tesla is also expanding its FSD beta testing to more drivers. That should help smooth the rollout of its FSD functionality. Second, continuous improvements in vehicle software and battery packs are required for Tesla to maintain its edge in EVs and FSD, and the company is focusing on these aspects too. Energy storage and solar deployments are other potential growth areas for Tesla. The company has been progressing well in both segments. Finally, Tesla is focusing on auto insurance as a growth opportunity. Obviously, the company plans to do this differently than traditional insurance companies. Tesla plans to use its vast driver data for things such as braking, turning, unsafe following, forward collision warnings, and so on to predict the probability of a collision and offer custom premium rates based on that. How Tesla fares here remains to be seen. Visit our channel and watch our other videos if you enjoyed this one.